Hey guys, welcome to Tuesday Trade Talk. Today I'm going to be talking about levels of support and resistance and kind of uncovering the mystery of all this stuff, right? And how to use it effectively in your trading, okay? So I really do rely on this for really most of the trading that I do. And so, and I really do try to keep things simple and use only the tools that are very effective for me. And so, so with that, let's move into what we're going to be talking about that make up different forms of support and resistance. Okay. So we're going to be talking about initial balance, and I just want you to know that. That I've used a lot of these terms and share a lot of this information in other sessions that I've had, but I'm going to kind of try to tie all this together, okay, and how I use it comprehensively in my trading. So the first one we're going to talk about is initial balance, high and low. We're going to go into Fibonacci retracements and extensions, talk about trend lines, moving averages, and dynamic support and resistance, okay, and I'll define these things more in detail as we get through it, okay? So let's start with let's see here. Let me go down. Okay. Sorry, screen's not moving here. Okay, there we go. Sorry about that. Okay, so let's talk about initial balance level first. And in this one, it's measured by the high and low of the normal trading session. Okay, and you can use this for any stock, for any index, futures. Traders use this, right, as an indication of the range, the initial range of the market, until it either breaks down or breaks up. Okay. And so you want to measure this at the 1030 mark. Okay, so all of this time you wait until this initial balance is defined, right? Both high and low, and then you can utilize these as support and resistance areas, for the day. All right, has nothing to do with Fibonacci extensions or retracements or dynamics or anything else. It is simply just a high and a low of the first hour of trading. So you have the initial balance high and the initial balance low. Okay. All right. Then I want to talk about, I'm going to talk a little bit about these different types of resistance, and then we're going to go into the charts. Okay. And I'm going to plot these things and show you how they work and how I use them on a day-to-day basis. Right. And so this is just, I shared this chart a lot before, and what it encompasses here is a trend line, a deeper trend line, support and resistance based on price, okay, and how that works. And then you got some moving averages in here, okay. So I kind of combined everything together so you can look at this thing and kind of start dissecting each piece, right? And so and I'm going to tell you a little bit about bias and how people use it, but I can tell you this, okay? Trend lines are, the definition of a trend line is it hits a line two points and the third point confirms it. All right, that's like the textbook definition. So you got 1, 2, 3 confirmation. Okay, so but again, you can draw a trend line based on your bias. So you have to be really careful when you're using trend lines and not completely rely on them. Okay, much stronger is support and resistance based on price. Okay, so a trend line is kind of moving. You can formulate it in different ways, but a price standpoint, from a price standpoint, it's black and white. So I really much more rely on price support and resistance rather than trend lines. Okay, but I do use them to give me kind of an indication where the market's going and what it's doing, and where, you know, if I have confluence of these signals, meaning using multiple signals to give me confidence in my trading, I'll use that as well. Okay, so let's point this out. So you have a trend line going down here, and then you have a deeper trend line that went down, right? And you can see 1, 2, 3 points here. All right, and this is an hourly chart, so it's a longer term chart, right? And when I trade futures, I trade longer term, you know, just because you know, I don't like to be in front of the screen all day long. You know, I like longer longer dated strategies that gives me actually larger returns as well. Okay, you just have to be comfortable with your stops, because I use very, very wide stops and really follow the trend especially when I'm trading futures. So so now you can see here what happens, and this is very typical. Okay, what happens is you have, over a 3-day period, you had basically support here, where the market was you know, fiddling around this area. Okay, and then you had a clean break down. All right, I mean, it broke through this hourly candle right through that resistance level, and so you could easily identify this as a break. And now this support area became resistance. So you can see here that it tried to, you know, over a couple days, again, it tried to move up, and then it finally broke up through, and then you had a false breakout here, right? So you want to be careful when you're trading. You don't want to jump in on the first signal that you get. Okay, you had a false breakout here, went down. Okay, and another characteristic of these trend lines too is that you see this trend line going down here. Well, the market broke that trend line, also broke this area of price resistance, and then went down, and it went down to the top of this trend line, which now the top of this trend line is like support. Okay, this happens, these patterns happen over and over and over again, and the longer you're looking at the market and trading, you'll notice these innately, right? Without having to, you know, break out the books and figure out whether that's support and resistance. You'll see it, and you'll see it forming so you can act on it. Okay. All right. So in general, we covered all the different types of support and resistance now, except for Fibonacci. Okay. And Fibonacci, I'm going to draw up for you so that you can really clearly see how to use Fibonacci, and in both extensions and retracements, so that you can use that for your trading as well. All right. So let me change screens here. Hold on 1 second. I'm going to pull up. I'm going to pull up my. Okay. I'm going to bring that over. Bear with me here a second. Okay. All right. Okay, so you should be able to see my longer term charts here, and ones that I use for my daily analysis, right, of what's happening. All right, so let's just talk about some of these. All right, and I'm going to go through these. Now, this is what I use. This is the SPX. These are the shorter dated support and resistance areas. Okay, and I've got this into, it's an hour. I'm going to move this out to where I plotted this. Okay, so this is where I plotted. Okay, and this is back in July. All right, from this, and I picked these levels because when I draw them, I like to see where the market kind of stops and starts. Okay. And where there kind of is congestion. So the market goes either up or down, mostly up, right? And when it moves, the market will consolidate for a period of time and then continue to move, whether it's up or down, doesn't matter, right? And so you want to encompass these lines, okay, these Fibonacci lines, to where it makes sense on the ups and downs of the market. And you can see here a lot of once we broke above the 618 area, it congested here for a period of time, and then we got above this again, and you see here that it congested here again, right? And it didn't really pull back too much, and it just kept moving higher, right? So, and in the same way it happens down, but it happens much more quickly. So here, you know, the market moved down 2 levels, right? And then congested within, you know, a lot more volatility when that happens. You can see very low volatility while it's moving up, a lot more volatility when the market's moving down, okay? Very, very typical. But you can see where the lines fit here, right? Where there's support and resistance. So now looking back, I can take these particular fib lines and say, okay, you know, I've got a certain amount of support and resistance here that I can use. So I'm going to break this. I'm going to bring this back down, okay, into an hourly chart. And yesterday, you know, I was trading, and you can see here where this thing just broke. I mean, it just, you know, came down here. I thought I was going to stop. It didn't, and it just broke through. All right. Now what's happening is you get a retrace, small retrace back up here, and it has to make a decision around this area on what it's going to do, whether it's going to continue going down or continue going up, right? And when you look at this, you say, okay, you know, since the market is generally going up, right? But now we hit a spot here since September that you know, it started moving down again quite a bit. You're in a phase here where the market's congesting, and you don't want to make really strong decisions on where it's going to go, but it's great for trading spreads, you know, because you know, the volatility is higher. You go down here, you know, you can put spreads way below, you know, and you have a really good probability of making money. And I use this all the time. I wait for the volatility to go up, and I put on put spreads because they're way down below in the market. And I've got about a 95% rate that, you know, those things come out profitable, okay? And profitable, nicely profitable, you know, not just 50%. I'm talking about 80, 90% on the credit that I initially put on. And that's what I typically use. Got a couple questions here from Bob. Okay, I'm going to use, you know, Bob wants to know about using nice marshmallows there. Fib extensions. I'm going to talk about fib extensions in a minute, okay? And I'm going to show you how I draw these things, all right? So let's go back and talk about the drawing. I think I mentioned how I drew this one. I went to the bottom, you know, and you can do it from anywhere. I just want to see where these, you know, when I change them, I want to see where these lines line up, right? Well, I can go from here and do the same thing, and you'll notice, you know, you have some of the same congestion here. It's not as clear. So when I did this, I wanted to go a little bit further down and get more, you know, longer price action for this longer dated Fibonacci. Okay, and we can draw these patterns on 4 hour, 1 hour, 5 minute, 1 minute. They all work the same. Okay. So I'm going back to 1 hour. That's where I have my chart. And then let me close this one, and then I'm going to talk about the daily here, which I use as well. And let me maximize this one. Okay. So the daily, let's see if I got So the daily, I went further down. This one is in since May. All right. And this is what I use for my longer dated, you know, stronger support and resistance areas, you know, on the daily. Okay. And you can see here what's happened is that, you know, once we broke this high, right, I drew, you know, I kept drawing this as the market kept going up. I would change my Fibonacci to go higher, right, until we finally had, you know, the high of the market, which was 35.88. That happened, you know, right at the beginning of September. Okay. And so after that, we had a big candle down, right, big drop down. And after this big candle, you know, there's going to be, you know, usually additional downside and definitely more volatility until you get that, you know, until you get that break up, right? And now we're up above this level here where the market went to. And so generally speaking, the market's going to continue moving now in that trend, moving higher, okay? Because it did break, and this is the 50-day moving average, right? And this is the 200-day. So I use this mostly for dailies, the 200-day. And I was kind of surprised that we didn't hit the 200, but we didn't. you know, and usually in a stronger market, it's not going to have that more shallow dive down. Okay. Or it's going to have in a stronger market, you're not going to have that stronger dive down, and I think this is actually the 100 in this area here. All right. And so we did break above, and I can tell you that this market is poised to take out the top. It's clear, and then I'll show you how I use other fibs, you know, and support levels to identify those areas. Okay, so we talked about retracements, and this is how I use retracements. Now, when a market's strong, it'll usually stay above the 23, you know, 6 area. You know, and as the market was going up here during this period of time, you know, from the May area, we had, you know, really strong levels, right? And you can see that the fibs wouldn't have gone below 23.6. On this one, we had a harder, you know, drop down. It's very typical that we do have a 50% retracement. It almost hit the 50%, but didn't make it down there. And again, we broke above this high here. Right, so we had a higher high, and so generally speaking, you know, the market is going to stay up here, and it's going to continue congesting and kind of backfilling and moving sideways to higher. Okay, and so I'm confident on putting in these put credit spreads because I know that we have plenty of distance down that I can cover here. And get a lot of premium for those plays. Okay, I'm not going to cover short covering on futures markets today, but I'll tag that for another session. All right, so let's move on here. Okay, so now I'm going to bring out this area here. I'm going to bring out NQ because NQ really moves. Love trading that in futures. And so you can see here a blank slate. Okay. Now, how do I use fibs in this case, right? So I'm going to open up my fib here. I'm going to use fib retracement. Okay. So I'm going to go from the highest point here, right, down to the lowest point here. Okay. And so now now that I got this, should clip right to it. Okay, got the high point here. All right, now you can see here that we have, and this just broke down yesterday, right? It went down to this area. And what's a characteristic? And I've talked about this in the past. A characteristic is that, and this is an hourly chart, you know, is that the market will go down, and then you'll test it. Eventually that it won't stand alone. Okay. This usually what happens is it goes down and tests it. So, you know, and I've talked about this in other sessions. So this is an excellent area here to go long. Okay. Now, a lot of people, a lot of traders, what they'll do is they'll wait. They'll wait till, you know, we get above this point here, so we know that the trend has changed, right? Because right now, if I draw a trend line, and I'm going to draw it here. Okay, where's my trend lines? Come on. Oh, there. Okay. Okay, I'm going to draw a trend line from here to here. Okay. So we have a trend here. We haven't confirmed that top. And then we have a trend down here, right? That's happening as well. All right. So now traders will wait until they get a break in this trend and then go down to put on a position. Okay. And it sometimes will break this trend and then go down to here, and then they'll put it on. Okay. Because they have it's a more conservative way to get into a position rather than waiting for this down move, you know. But a lot of scalpers will see this down move here and jump right on it. You know, they'll put a position right here, right above it, a limit in, so they'll grab it, you know, with a tight stop at the bottom. Very typical trading, habits here. Okay, so what I use, I don't really like to use these trend lines because, again, they can be biased. You can draw these things, and you don't want to draw them too steep. Since I'm covering trend lines, I'm going to show you here how different, one person can put it over the other, right? So I can take this trend line and say, no, that's too steep. I'm going to move this trend line down to here and have a more flatter type of scenario here, right? Or maybe I want to cover, more points. So I'm going to move it here and move this up here. Now we're covering, a couple more points. Now we've got 3 points. Okay. So this is the type of thing that traders can do, and these trend lines are not, they're subject to the trader itself. Okay. So that's why I like using support and resistance, which is very clear. This is an area of support right down here. It's very clear now where it is. Okay. And then using the fibs, you can see here. So if you look, see what's happened. It moved up, it moved up above the 23.6 and stopped at the 38.2 level. And again, we stopped at the 32.82 level, right? Now I drew this after, right, the market has made its move, okay? So now you can see, it's clear that in order for this market to go up, it's got to break this area up here. It's got to break the 38.2 and at least retrace up to the 50% level, okay? So if you're using fibs, right, and I like using fibs a lot more than trend lines, you'll know, and if you've gotten into the trade already, you hold it, and then it generally will break the 38.2, and then you'll take profits around the 50% of the 618. And that's a high probability trade in this hourly chart, okay, that I use, right? Okay, so now let's talk about, so that's how I use fibs, right? So let's talk a little bit about extensions now. Okay, let me erase all this stuff. Okay, so now let's talk about extensions. Okay. So the clearest way to identify in this case right here, a good extension to use, you can do them up or down, right? So if I were to go, thinking that I'm going to go short, and I hardly ever do, just because again the market's generally moving up, okay? But I'm gonna put a retrace, not a retracement. I'm going to put an extension here for a short, okay? So we start with, and this is point A, okay, and I'm using the extension tool. Didn't get exactly where I wanted to, but B, C. Now, typically what you want in an extension is for the market to go a little bit higher, at least to the 618 level. So I'm gonna put in here a fib retracement so that I can understand, where this market has gone to. Okay, so I'm using a retracement, and you can see here that it hasn't gone to the 618 yet, and usually the market will stop around the 618. And let me fix the extension. Okay, this extension should be here at the higher point. Okay, so usually the markets will retrace to the 618, so you get a deeper corrective action up, right? And then that should be your C level, your C leg here for the extension. Let me write this out. So you can go up to here basically, okay? And then the pattern is AB, and the same distance from AB down to CD to your 100 level, okay? So that's where your target would be for a short, all right? So this is A here, B here, C here, and then this is your short area, D down here. And it usually goes between 100 to 300 to 125. It's really strong down. It'll go down to the 161.8 level, okay? So that's how I use an extension going down, okay? So, but I favor extensions going up. So I'm going to put an ABC going up. And so I will use a extension here, starting here. This is my A, here's my B, and here's my C. Okay, so now we've got a we've actually got a trigger already, and let me expand this out so you can see it. Okay, so that's my A, B, C area here, and once we get above this 618 level, it's basically a trigger to go long. All right. And usually this trade will go from here to the 100 level or the 125, and that's where you will take your profit. Okay, so so again, this is a long area here, right? A to B is going to be the same level from C to D. Okay, same amount of distance, right? To take your profit. But you can see here it's kind of struggling on the 618. It hasn't broken through, and so you want to make sure that that trigger happens above the 618 area. Okay, and that's how I use extensions. If you want to go a lower time frame, let's do that. Let's go to the 5-minute here, and kind of do the same thing, only much shorter time frame. So let me kill this. This extension here, all right? And now looking at this thing, we had a low here, right? And a pivot here. And so this is kind of a perfect scenario here. So for a long, all right? So I'm going to take a Fibonacci extension. I'm going to draw it from here, the low, up to here, down to here, okay? And look where it hit, right at the 100, and it's stalling right there, okay? So if you would have entered this trade, and this is a very good, this is a very clear, what do you call it? Reversal, right? So we had our down here, we actually had it tested on the 5-minute, okay? And then we had a higher low here, right? That we had a very strong move up, you know, and right here it would have been a nice place to get into this trade using the extension, okay? And it went up right to the 100. That's where you take profit, right to the 100. You know, if you're conservative, you know, or if you're not conservative, you're a little more risky. You go to the 125, depending on the market conditions. You know, and today we're you know, consolidating from a move down, and so it would be probably prudent to take the 100, take your profit and go. Okay, so that's how I use these extensions, and these are all based on Fibonacci support and resistance, and even, you know, these patterns of resistance here. Now, what's happening, okay, is an area of resistance based on an extension, and the reason is because a lot of traders are using these extensions the way that I outlined them here, okay. And they're closing their trades right here at this level. So you'd say the pattern is completed. You know, now you wait for the next setup. Okay. Okay. And so one more area that I wanted to cover is you know, more the dynamic areas of support and resistance, and I want to make sure that you're able to identify those. Okay. So we might go a couple minutes over, but give me a chance here. Okay. So I'm going to go back to the hourly. Oops, that's a daily. Go back to the hourly. Now, if you were to draw out, right, where these areas of, you know, support and resistance is, well, you know, I already have a line here that shows you clearly the break, right? So if you were to look, how many times did that hit, you know, on the hourly chart, right? So let's draw a line there. You know, and you'll see these without drawing lines. I'm telling you, they just appear, right? Clearly, that's an area of support where the market went down, it went back up, it went down, it went back up, and then here we broke. Once we broke that area, just like in the other screen I was sharing with you, right? Once we broke that area, then this area of support became resistance. So now look at it. A couple days later, we tried to break that area, you know, and we got a rejected candle here, right? Right in this area of resistance. And then actually the trend changed to down. Okay, so now the trend is moving down, and it's going to have to break, you know, these areas. And so where's another area of support and resistance, if you can see it? So I know you can't, you know, you can't talk to me, but another area where, you know, where it stops is basically here. Okay, and it doesn't have to be exact. Okay, but you can see here where we had support here, a little bit higher here, you know, but then we broke down again. But look where what happened now. This area of support again became resistance. So now we've got to break through this area in order for this market to move higher. Okay, and so, you know, again, you don't really want to put on trades unless you're scalping, right? You don't want to put on trades until you have a trend shift. Okay, and we're getting higher highs and higher lows, right? Because right now, you know, we broke yesterday and we're still consolidating, and it's really not a safe place to you know, to put on a trade unless you're scalping here, what I showed you earlier. Okay, hopefully this helps. I went through a lot of areas here. You know, I'd recommend you'd review this again if you have any questions whatsoever. You know, just let me know, ping me, and I'll answer any questions that you guys have. All right. Other than that, have a great rest of the day and rest of the week. All right, guys. Thank you.